Monday, it's a new week. We're going to go over today's market moves on S&P and the Nasdaq and why I didn't take a trade. One of the reasons being I kind of just missed it, and it's just one of those. I was super busy at work today, so in terms of what we were looking at, we go on the daily chart. Friday, 4 hour even. So we got this new weekly opening gap here coming into the Asia session. Price dropped down. No. Anyway, ignore that. So Monday from Sunday's moves. Oh no, yeah. New weekly opening gaps. That was the Sunday open. That got filled pretty quickly during the Asia session last night. London session just traded up, gap down, didn't quite take the Asia low, and then gradually just filled this imbalance, building up to the AM session. Think similar on the S&P. Yeah, kind of similar. So you can see the range between the previous daily high and previous daily low is only about 300 points on here. And then for the S&P, it's about 892 to 831. So it's about 40 points. So it's pretty nice previous daily high, previous daily low target to go for. In terms of what I was looking at for the start of the session, firstly being this Asia session, PM session high for Friday. Sorry, I'm all over the place. And then, yeah, pretty much marked out the 8 a.m. 15-minute candle in line for the break and retest model. Did that on both. So you can see here on the Nasdaq. And, yeah, wasn't really looking too much at the charts today. But as you can see, price came up to the PM high from Friday. There was a slight reaction. I was initially thinking maybe, try and short back down to the midpoint of this rejection, but I just wasn't really confident in it. So, didn't really need to take that at all. And then from here, if we go into the hourly, the main draw would have been the previous daily high and then this high here. So that would have been the main target. Wouldn't really needed to trade any higher or target any higher. But yeah, in terms of the break and retest model, what we got was, price came down, tapped the midpoint. Well, it just sort of came down from there, pushed up. And then right at the open, we got this big wick down just to the top of the zone. Now, with this model, you can take it from the midpoint, or you can take it from the top if you're bullish, or you can take it from the bottom if you're bearish, depending on how the context of the candles is displaying itself. And yeah, so on the Nasdaq, it played out a bit better. This would have been a nice 3.72 to 1. 2574, 2538. It's about 30 points, maybe 27 points. Yeah, 27 point stop. Target previous daily high. There you go, 3.72. In terms of what I was looking at the time, I was on the S&P, so price is already above the PM high. If we drop down into the 1 minute, you can see this little volume imbalance here. And yeah, pretty much at market open, price wicked down into that and then just went pretty quickly. So yeah, I kind of missed it. I was gonna set up a trade. Well, I lined one up for around here, but literally within like a 1 minute candle. So stop would have been like just down here. Target previous daily high. Not liking how wide that is. Doesn't need to come that far. Right, there we go. So after this, go from the body of that candle like that, bring that up, tight stop below this, 1.87. It's a bit risky, but yeah, the Nasdaq would have been a better option for this to play out. In terms of a further entry to target the previous daily high. So because the S&P hit it so quickly and just absolutely broke through it, the Nasdaq was lagging behind a tiny bit, as you can see. So I was thinking, you know, we've got a 1 minute fair value gap here, a 5 minute even, but we also have 5 minute fair value gap here. So the entry would have actually been off of this one, and then say midpoint there, stop below that, TP there, or just below that. So it's like, yeah, there's opportunity, but it just wasn't ideal for me today. So no trades, simple. In terms of news, we didn't have any red folder. It's a bit bright. But the rest of the week, or tomorrow, no red folder again. But the rest of the week, I'm going to be very cautious. You know, Wednesday we've got FOMC, we've got Canadian monetary policy, federal funds rate. What is that? Interest rate decisions. Yeah, so I'm expecting there's going to be quite a bit of manipulation around that. Got unemployment on Thursday, so maybe can have a look there. And then Friday is double red folder, so no trading on Friday. Keep that simple. And yeah, tomorrow and Thursday looking to be the days this week. If you don't take any trades, absolutely fine, to be honest. We'll just keep the losses capped for the month, I think. But then again, we'll look for a setup tomorrow and Thursday. Wednesday, like, there's no need to be touching this. Granted, it isn't a PM session, but even still, price can normally do some tricky things on those sorts of days. So, you know, higher time frame targets, what we're looking at. Let's go on the S&P. We got, let's do horizontal rate, that high, that high, and that high. So, let's make sure that's right. So those are draws there. We also have fair value gap created here within this range. Obviously, price has traded through that. But I wouldn't be surprised if in the PM session, you know, we see price come down, rebalance this, and then possibly a continuation upwards. And then on the Nasdaq, we have, let's go to 4 hour. So that high has been taken there. We also have this and this. Let's make sure they're all properly placed. That'll do for now. And then sort of similar situation, except we have this wick. So I'm thinking maybe this week will be bullish. If we look at the daily chart, take the drawings off, kind of been ranging a little bit. So yeah, just makes sense. Those would be natural draws on liquidity. And then same again for the S&P. Just seems like we're going to take these highs. Simple as that, really. Obviously, we've had a very bullish candle so far today. So, yeah. In terms of commodities, gold is ripping the absolute stratosphere. Hit 5K today. So yeah, that's still on a complete madness at the moment. And silver, well, the BlackRock ETF is over 106, and I sold at 71. So missed out on like another 200 quid there. But, you know, it is what it is. Simple as that, really. We just have to see what goes on in the rest of the week, what the decision is on Wednesday in terms of interest rates and the FOMC statement. See what sentiment that gives the market. And I think that's going to just about do it for me today. With all that being said, trade smart, and I'll catch you in the next one.